So there are companies who might feel that this accounting standard is not of their value, is not of their usage altogether. Mahindra & Mahindra is a leader when it comes to farm and tractor equipments. Automatically, the type and class of customer will definitely differ from that of the normal vehicles. So what is being mentioned in those paragraphs, in those bylaws, is what the company has to follow when they are going into their disclosure patterns. Good morning and welcome to the session 5 in Unit 5 of International Financial Reporting Standards, where we are going to talk about the operating segments as per the Indian Accounting Standards 108. Now, moving further, this accounting standard shall apply to companies to which Indian Accounting Standards notified under Companies Act apply, which means to say that this accounting standard will be applied only to those companies under which the accounting standards is complying even with the company's law. Now, if an entity that is not required to apply this Indian accounting standard, it will choose to disclose information about segments that do not comply with this Indian accounting standard, it shall not describe the information as segment information. So there are companies who might feel that this accounting standard is not of their value, is not of their usage altogether. So they will not be going in with this standard. They will try to go in and try to describe the information in a different format altogether. Now, the second thing is the operating schemes. Let's try to understand what is an operating scheme here. An operating segment is a component of an entity that engages in business activities from which it may earn revenues and incur expenses. Now, for example, if I am in the business of logistics, so logistics is a business, it's an operating segment for me through which I am going to earn money and I'm also going to incur expenses. Now, that is the form of business, that is the form of the segment in which I am operating. So now what is going to happen here is that the revenue as well as the expenses relating to the transaction with the other components of the same entity. So my revenue, my expenses are going to be recorded from that operating segment only. Now, the second thing is that whose operating results are regularly reviewed by the entity's chief operating decision maker. So we are going to have a role called as the chief decision operating maker, because this chief operating decision maker is going to make decisions about the resources that are to be allocated to the segment and assess its performance. So like the role of a COO, there is going to be a CODM who is going to allocate the resources. He is going to make decisions about the components that are involved in that, and he is going to assess the value, its performance, its outcome altogether, for which the discrete financial information is available. An operating segment may engage in business activities for which it has to yet earn revenues. For example, startup operations may be operating segments before earning revenue. So in the case of a startup, let's say that I have started the company in the year January 2021. I might be able to get my revenues only by next January 2022. In that case, for this 1 year, I'm just an operating segment rather than a company itself. So I will be reporting my revenues earned in the next financial year. So that is why we mean that most of these startups will work initially as operating segments before they become full-fledged earning revenue-based companies. Moving further, let's talk about the management approach. The management approach entails the segment disclosure based on the operating segments known as components of the entity that management monitors in making decisions on the operating matters. Now, what is the management approach here is that the management approach entails segment disclosure. It is segment wise what is the disclosure, what are the factors that we have to look in based on the operating segments, based on the components of the entity that the management monitors in which they are making the decision. Why? Because for the management, certain units might be on the profit-making role, certain units might not be making as good as expected profit. So the management approach is very, very important because they will look into what decisions can be made here regarding the operations. And the next thing is that such operating segments are identified on the basis of internal report. The entity's CODM, Chief Operating Decision Maker, assesses regularly in allocating resources to the segments and evaluating performances. Now, for example, let us take an automobile company like Mahindra and Mahindra. Mahindra and Mahindra is a leader when it comes to farm and tractor equipments. Mahindra and Mahindra is doing very good in that operating segments compared to that of Mahindra and Mahindra in two-wheelers. So now it is the entity's chief decision maker that comes into position who says that let's try to concentrate resources more towards the tractor farm equipment business followed by the SUV business rather than just looking only into the two-wheeler segment. So for every organization like this, they will have operating segments where they are doing extremely well and they will have operating segments where they are not performing well. So in those cases, in those category, in those segments, it is the decision of the CODM that matters a lot altogether, because this is where it needs to be really understood. It really needs to be taken into account. Moving further, the aggregation of the operating segments. The aggregation of the operating segments is allowed only when the segments are in similar nature and they meet the number of identified measures. Now, there are certain identification, there are certain factors which have been identified by the chief operating decision maker, who believes that based on these factors only, we will be able to identify the resource coming out from that operating segment. So it is very, very important for the management as well as for the organization to understand those operating segments before taking a call. There might be sometimes that the management might overlook the operating segment, that this is not making any profit, but in the long run, yes, that unit might be of a great resource. So first thing that what we try to do is that we identify the operating segments based on certain parameters which can actually give a composite rating altogether, followed by, in other words, two or more operating segments may be aggregated into a single operating segment if the aggregation is consistent with the core principle of Indian accounting standard. The segments having the similar economic characteristics and segments are similar in each of the following aspects. Now, as I was telling you about the example, let's say that we have an example where a company is manufacturing a four-wheeler and also a company is manufacturing LCV, what we call it as light commercial vehicles altogether. Now, if I feel that these two segments can be combined because the nature of operation is similar, the nature of economic output is similar, then as per the Indian accounting standards, the core principles taken into account, we can combine these two entities and we can probably look in for the economic value altogether. So there are possibilities for companies who will try to combine the operating segments based on the nature of operations and start working towards it in a similar goal or in a similar format altogether. So this makes the system even more stronger. This makes the system even more valuable in the long run. So that is why we try to identify, we try to segment it out as how to take it forward and how to build a composite system altogether. Now, moving further, the aggregation of operating segments. Now, what is the aggregation of operating segments to be understood is, the first point is the nature of product and services. So what kind of products, what kind of services that you are involved into. Now, one side, when we talk about manufacturing company, they might have n number of products. But when we talk about IT services company, they have a different parameter altogether. For certain IT companies, they are strong in consulting, weak in terms of the products or in terms of the BPO. There are certain companies which are IT product oriented, which are more into the design oriented. So there might be different functions or segments which needs to be looked in and identified, followed by the nature of production process. Now, when you start looking into companies like Toyota, when you start looking into companies like Honda or Mitsubishi, they have got a very high-end process, which means high quality oriented process. And that is also similar for the Indian automobile companies like Tata or Mahindra to talk about. Why? Because even they have also started adopting these kind of processes. But what is important for us is that the nature of production process, what methodology is being used to produce those kind of vehicles, followed by the type or class of customers for which the product or services are being done. Now, when you look into high-end cars like the BMW, the Audi, the Mercedes-Benz, or we talk about Ferrari, Lamborghini, and all those kind of high-end cars, automatically the type and class of customer will definitely differ from that of the normal vehicles. So in that case, the operating cost will also be high, and the inputs and the production process will also vary. So that also forms a very, very important component in terms of understanding the operation. Now, the next thing is that the methods used to distribute their products or their services. Now, if the company is going to go on a method of self-serving, which means they have their own franchisees, they have their own listed outlets, they have their own company-owned outlets, then that's going to be another cost. Or if the company is going with a multi-level marketing, a different kind of franchisee or a network, so the distribution factor will also matter a lot in terms of accounting. If applicable, the nature of regulatory environment like the banking, the insurance, and the public utility, because these are all minute components which will have an impact in terms of the operating segment. Followed by the matrix form of organization. When I say the word matrix form of organization, it's all about the characteristics of the operating segments, which may apply to two or more overlapping set of components for which managers are held responsible. So this factor is very, very important. Why? Because there are many functionalities that I would like to say where there are multiple components. Now, for example, in the IT services itself, we have a division called as the BFIS, which stands for Banking Financial Insurance Services. Now, what happens here is there are different kinds of factor. Banking is one component, financial services is one component. Then we can talk about the insurance as another component. So when I say BFSI, the Banking Financial Services and Insurance, so you have multiple components there, banking, financial services, and the insurance. So that's exactly where you start looking into multiple operating segments itself. So there are managers who are held responsible for the sets overlapping or for the different factors that are overlapping into picture. That structure is sometimes referred to as the matrix form of organization, where you will have some managers reporting both at the Indian level and at the US level, and you will have different products and services where you have to report to multiple managers, multiple leaders across the world, and they are responsible for the specific geographical area service delivery. So what I try to say here, when it comes to the matrix form, this is quite a complicated form of reporting where you have multiple managers, multiple people reporting from different locations, from different standards, who in turn come back to us in terms of knowing us, in terms of telling us how exactly the services sector will work. Now, the next thing is that the matrix form of organization, which also consists of the chief operating decision maker, regularly making a review about the operating results of all the components, the financial information that is available on both sides. In that situation, the entity shall determine which set of components constitutes the operating segment and as per the principle. So the CODM will definitely make an assessment, will try to find out which are all the components that can be utilized here for the operating segment that has been generating value to them. Because many times what happens is that the CODM might try to find out that though there are promising segments, but they might not be the real exactly operating generating segment. They might all be a segment which will try to just understand or just try to tell you how the things are moving further. So in this case, what happens here is that they will first try to make a clear assessment about what are the segments, what are the values, and how we can take it further. The next thing is the quantitative method. So when I use the word quantitative methods, it's more about the numerical assessment, where I try to say an entity shall report the information separately regarding the operating segment that meets the following the quantitative thresholds. Now, what are the quantitative thresholds? First thing is that it's reported revenue, including both sales to the external customers and inter-segment sales that have gone through or transfer, is 10% more than the combined revenue, internal and external operating segment. So let's first look into the first part of the reporting segment. It says that the reported revenue, which includes both sales to the external customer as well as the inter-sales, the intra-sales segment customers, that is we are talking about inter-segment sales or transfer, which is 10% more than the combined revenue, internal and external, of the operating segment. So these are all the factors which have to be put together in order to report the revenue. So that's where this becomes very, very important for us. So first we have to see all this, check out on the operating segment, and then start moving to that particular level. The next one is the absolute amount of its reported profit or loss is 10% or more than greater in the absolute amount, and it is combined reported profit of all operating segments that did not report a loss. The combined reported loss of operating segment and that reported to a loss factor. Why? Because when we look into the operating segment, we will try to understand two factors. One is the combined report of all reporting segments that did not report a loss, which is very, very important. The combined report loss of all operating segments that is coming into picture, that has also reported a loss. So we have to see the combined structure as well as that reporting structure, so that we are able to get a consolidated report of how much is the loss that has occurred as per the operating segments. Now the next one is that its assets are 10% or more than the combined assets of the operating segment. The operating segment do not meet any other quantitative threshold, because this is very, very important for us, may be considered reportable and separately disclosed if the management believes that the information about that segment would be useful for the users of financial statements or the people who are going to invest in the company. So sometimes let us try to understand this. Its assets are 10% or more of the combined assets of all operating segments. So it has to be 10% or more. The next thing is that operating segments that do not meet any quantitative threshold, suppose I am not meeting the prescribed standards, may be considered reportable, but not here in a separate format. Why? Because the management considers that using that information, it might be of a great use to the investors or the public who are interested in terms of investing in the company or make some financial analysis about the company. Now, the disclosures that are very, very important here. The first level is that the entity shall disclose information to enable users of the financial statement to evaluate the nature and financial effects of the business activity which it engages in the environment, which has been clearly told here. Why? Because Now, in the paragraph 21 of the accounting standard, the entity shall make the disclosure as it is being prescribed, so that they are able to make understand to the users very clearly, stating that what is the effect of the business, what are all the impacts in terms of the revenue, in terms of financial values and matter. That has to be reported as it is being doing the operation for several years. Now, the entity shall also disclose the following of each period in which the statement of profit and loss is presented. First thing is information about reported standard profit and loss, including specified revenues and expenses included in the reported segment of profit and loss, the segment assets, segment liabilities, and the basis of measurement as described in the paragraph 23 to 27. So, as being described in the segments, we have to give the information regarding the specific expenses and the income that has been generated, and the segment profit that also has to be given to the public in order to make the nature of financial decisions. Followed by the reconciliations of the total segment of revenues reported with segment profit or loss, segment assets, segment liabilities, and other material segments to include in corresponding format as described in the paragraph 28. Why I'm giving you this paragraphs is that this is reported exactly as per the Indian accounting standards. So what is being mentioned in those paragraphs, in those bylaws, is what the company has to follow when they are going into their disclosure patterns. Reconciliation of amounts in the balance sheet for the reported segment to the amount of the entity's balance sheet are required for each date in which the balance sheet is presented, and this can be seen in the paragraph 29 and 30. So even the reconciliation of the amounts in balance sheet and that to the segments in the amount has to match, and this has to be presented for the nature of financial decision making to be made. Now, followed by, let's talk about the reconciliations here itself. The Indian Accounting Standard AS 108 requires reconciliation as to total reportable segmental revenues to the entity's revenues, total reportable segment assets and liabilities to that of the entity here, as well as the reportable segmental profit or the loss to discontinued operation, total reportable segment amounts for every material information and the material factors that are being disclosed. So this is quite a comprehensive standard where you are going to report each and every values of your assets and liabilities with regards to the entity, with regards to the organization, the segment wise reporting in terms of financial factors, in terms of whatever the loss, whatever the profits that are being made has to be reported very, very clearly here. Now, with this, I come to the end of this particular session. I hope and believe that the session was of a great help and resource to you. In the upcoming sessions, we shall see more about the reporting standards that are making an impact in the modern business world. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today on this wonderful session.